Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 October-November Paper 2-3 question number 4. This is Paper 2, which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit for the paper is 1 hour and 45 minutes. Since question number 4 is of 30 marks, ideally you should be spending about 35 minutes in order to solve this question. And in this video as well, we'll be attempting to solve this question under 35 minutes. So without any further delay, let's get started. H Limited is a service company providing administrative support to businesses. The company operates 2 separate departments, payroll services and accountancy services. The directors are currently preparing budgets for the year ending 31st December 2025. The company's fixed overheads include the salaries of the employees. Each department, we have 2 different departments, payroll and accountancy. So each of the departments will have 5 employees working 48 weeks each year, 40 hours per week. So within payroll services as well as accountancy services, we have total of 5 members, and each of those members will work for 48 weeks in that particular year, and within every week they will work for 40 hours. Then the payroll services department employees earn 18 per hour, whilst the accountancy services department employees earn 21 per hour. The company's other fixed overheads are apportioned 35,000 to the payroll services department and 33,000 to the accountancy services department. Each department also incurs variable overheads of 7 per hour. The company charges its clients 35 per hour for all services applied. The company charges its clients 35 per hour for all services supplied. Now, for the first part, we need to calculate for the payroll services department only the total number of chargeable hours available for the year ending 31st December 2025. Okay, we need the total number of hours that the employees will work within our payroll services department. We were told that each department will have 5 employees. So in total, within payroll service department as well, we have 5 employees. Each of those employees will work for 48 weeks each year. So we are calculating the total hours for the year itself. That's why we need to multiply 48 weeks. So this will give us the total number of weeks that the employees will work within our payroll services. But in this case, we need the hours itself. And we know that for every 1 week, the one employee will work for 40 hours. So in total, we just need to multiply 40 here as well. Okay, now we will get the total number of chargeable hours available for the year ending 31st December 2025, specifically for the payroll services department only. That will be 5 times 48 times 40, which results in 9,600 hours. Okay, for the second part, we need to calculate the break-even point in hours. Normally, we calculate the break-even point in units, but in this case, we're not talking about a trading business, which will give goods in units. In this case, we're talking about service department, and those services will be provided per hour. That's why we need to calculate the break-even point in hours as well. But for this case, the formula will not be changing. We will still need to figure out our total fixed cost. And then we need to divide it by the contribution. Normally, the contribution will be contribution per unit, but in this case, it will be contribution per hour. So let us first calculate the total fixed cost. Okay, we were told that for payroll services department employees, we need to pay 18 per hour. And we were also told that the company's fixed overheads will include these salaries. So we can start with the total salary. We know that the total hours worked within the payroll services department is 9,600. And for every 1 hour worked, we need to pay 18. So that will just be 9,600 times 18. Then we have the other fixed overheads as well. For the other fixed overheads, 35,000 is given to the payroll services. It means that this 35,000 should also be added while calculating the total fixed cost. So it will just be 9,600 times 18, which will result in 172,800 plus 35,000, which results in 207,800. Now we also need our contribution per hour. So this will just be the selling price per hour minus the variable cost per hour. In this case, we were told that the company charges its clients 35 per hour. So this will act as our selling price. So we start with 35. Then we need to subtract the variable cost per hour, which was given right here. Each of the department also incurs variable overheads of 7. So we need to subtract 7 from 35 in order to get the contribution. That will just be the value of 28. So the break-even point in hours will now be 207,800, which is the total fixed cost, divided by 28, which is the contribution per hour. This results in the value of 7,421.42, and whenever we are calculating the break-even points, we always need to round it up. So that will just be 7,422 hours. That's the answer we require. That's all for the second part. Now we need to figure out the number of chargeable hours required to produce a profit of 45,000 for the year ending 31st December 2025. So we need to figure out the number of hours. And in order to calculate our total contribution, in this case the contribution is per hour. So the total contribution will be contribution per hour multiplied by the number of hours, which is what we need to figure out in this case as well. So we can just create an equation. The number of chargeable hours times the contribution per hour of 28 will give us our total contribution. Now we have the profit. Remember that profit is just going to be total contribution minus fixed cost. We've already calculated our fixed cost to be 207,800. This will give us the profit of 45,000. Now we just need to solve this equation and figure out the number of chargeable hours. Okay. This will go to the other side, so we need to add it. 45,000 plus 207,800. Then again, this will go to the other side as the denominator, so we need to divide it by 28. This results in 9,028.57 hours, and again we need to round it up. So that will be 9,029 hours. That is all for this part. Now, we have some additional information. Due to poor motivation, the Payroll Services Department is expected to work at 85% capacity during the year ending 31st December 2025. Okay, so out of the total hours that we calculated, they will only work for 85% of those hours. And in this case, the total hours that we previously calculated at full capacity was 9,600. Now the number of hours worked will only be 85% of total capacity 9,600, which results in 8,160 hours. Now we need to prepare a budgeted marginal cost statement to show the Payroll Services Department profit for the year ending 31st December 2025. Okay, so we just start with our revenue. And remember, in this case, there is no unit. So whatever values we work, that will be per hour values. And we already have the selling price per hour, which is given right here, that's 35. So in order to figure out the total revenue, we just need to multiply the 35 rate per hour to the total number of hours, which we just calculated to be 8,160. This will give us the total revenue to be 285,600. Then we need to include the variable cost. And again, variable cost was also given per hour. Previously, the variable overheads was 7 per hour. Now the total overheads will be 7 times the number of hours, which is 8,160. This results in the value of 57,120. We need to subtract the variable cost from our revenue so that we can calculate the contribution. So that will be 285,600 minus 57,120, which results in 228,480. After contribution, we need to subtract our fixed cost so that we can get the profit. The fixed cost will not change due to the change in the number of hours, because regardless of the hours worked, the fixed cost will still remain the same. So we can still use the previous value, 207,800. Now we can calculate the profit for the year. That will just be 228,480 minus 207,800, which results in 20,680. That's all for the second part. Let's move towards the next one. We now have some additional information. The directors of H Limited are of the opinion that the performance of the Payroll Services Department must be improved. 2 opportunities for further development have arisen. So we have option 1 and option 2. For the third part, we need to calculate the number of overtime hours required for the Payroll Services Department for the year ending 31st December 2025 if the directors choose option 1. Let's go through option 1. The company has been approached by a competitor business wishing to dispose of all of its payroll work, the extra work would require an additional 4,180 chargeable hours in the department over and above the total number of chargeable hours available. So the total number of chargeable hours was what we calculated before, 9,600. Now, above these hours, we would need additional 4,180 chargeable hours in order to complete the work given by the competitor business. In order to take over this work, H Limited would have to employ 2 new employees and would result in the department's capacity being over 100%. Overtime is paid at a premium of 50% in order to increase motivation and to retain their current and new staff. The directors feel that they would have to increase the fixed salaries to 21 per hour. I think previously the fixed salary was only 18. Yeah, previously that was 18 per hour. So now we are looking to increase from 18 to 21, the same rate earned by the accountancy services department staff. Okay, so in this part of the question, we need to figure out the number of overtime hours. So we can start with the total available hours. Which we calculated in the very first part, that was 9,600. So above this 9,600 hours, we would need additional 4,180 hours. So we need to add it. 4,180 hours. This is the additional hours required. Then, by adding these two, we can figure out the total hours required. That will be 9,600 plus 4,180, which is 13,780. Now, we need to figure out the overtime hours. So we first need to figure out how many hours do we already have. So currently available hours and we're talking about the yearly hours, right? So we just need to repeat the same process that we did in the very first part. So previously, we only had 5 employees and each of them worked for 48 weeks and in every week they worked for 40 hours. But under option 1, we have been told that H Limited would have to employ 2 new employees as well. So in total, previously we had 5, so now we have 2 new. So the total number of employees will be 7. All 7 of these workers will work for 48 weeks and within 1 week, all of them will work for 40 hours. So 7 times 48 times 40, which results in 13,440. Now, we already have these many hours, but we require a total of 13,780. So the difference will be the overtime hours required. So 13,780 minus 13,440, which results in 340. That is the additional overtime hours. And we have been told that overtime is paid at a premium of 50%. So within these 340 hours, we would have to provide additional 50% rate. Now, we need to prepare a budgeted marginal cost statement to show the payroll services department profit for the year ending 31st December 2025 if the directors choose option 1. Okay, we can just start with the revenue. Again, the revenue is based on the number of hours and the total hours we've already calculated. This is the total hours required. So that will be 13,780 multiplied by the selling price per hour. And this will remain the same. There is no change. So we can still use the value of 35. This gives the total revenue to be 482,300. Now we need our variable cost. And within the variable cost, we also need to include the overtime payments. So for the variable cost itself, within these many hours, we need to pay the basic rate. The basic rate was 7. Yeah, it was given right here. The variable overhead is 7 per hour. So we need to pay the basic rate. And then for the overtime hours, we also need to pay the overtime as well. So within 340 hours, we're paying the overtime. And remember that overtime is the rate paid at the 50% of their fixed salary. And we have been told that the fixed salary is now being increased to 21. So we have to pay 21 for these hours along with 50% of 21, which results in a value of 31.5. Remember, these are the payments made for the overtime hours, and the overtime hours will not be a part of our fixed cost. This will be a part of our variable cost because the overtime hours can differ. It will not remain the same. That's why we need to multiply the overtime hours by the rate of 31.5. This gives the value for the variable cost to be 107,170. Now we can get the value for the contribution. That will just be 482,300 minus 107,170, which results in 375,130. Now we need to subtract the fixed costs. In this case, the other fixed costs will remain the same, but since the fixed rate of salary is changing, this part will have to change because the number of hours as well as the rate, both of these things have changed. So the only constant will be the 35,000. Then we need to calculate the fixed salary part separately. So 35,000 will still remain the same. And under option 1, we were told that now the fixed salary will have to be increased to 21 per hour. And the total hours in this case will be 31,440 because these are the total available hours. We'll only pay the fixed salaries on these part because within the overhead part, we've already included it as part of our variable cost. So only these many hours will be a part of our fixed cost. So that will be 13,440 times the rate of 21. This gives the total fixed cost to have the value of 317,240. Now we can get the profit for the year. That will just be 375,130 minus 317,240, which results in the value of 57,890. That is all for the fourth part. Now, for the fifth part, we need to calculate the payroll services department contribution for the year ending 31st December 2025 if the directors choose option 2. Okay, under option 2, the company has also been approached by a large overseas company offering to process all of the payroll work for a fixed fee of 390,000 per annum. So instead of doing the payroll work ourselves, we will just hand it over to this overseas company and they would do the work for the cost of 390,000 per annum. If the directors choose this option, the payroll services department would be closed down. H Limited would continue to charge its clients an annual fee for providing the data. This would be based on a 22% markup on the cost of the annual fixed fee charged. And within the fifth part, we have to calculate the new contribution for the year. So in this case, the contribution will just be whatever we are charging to the client as an annual fee in order to provide the data. So this part. And we have been told that this would be based on a 22% markup on the cost. So the contribution is just going to be 22% times the fixed cost because it's the markup applied on the cost of the annual fixed fee charged. Let's do that. So that is just going to be 390,000 times 22%, which results in a value of 85,800. That's all for the fifth part. Let's move towards the next one. Now we have some additional information. The directors require each department to make a profit of 45,000 for the year ending 31st December 2025. The accountancy services department is budgeted to make a profit of 49,800 for the year. We need to advise the directors which option they should choose, and we need to justify the answer by considering both financial as well as the non-financial factors. And this is of 7 marks. So we need to have 3 points for option 1, 3 points for option 2, and 1 final decision. And we also need the financial factors. So maybe 3 financial factors, 3 non-financial factors. Let's start with the financial factors. The first thing we can do is compare the profit that they generated to the target profit of 45,000. So under option 1, we had the profit of 57,890. So we can see that option 1 exceeds the target profit. So option 1 exceeds the target profit. Let us also calculate it by how much? By the value will just be different. So 57,890 minus the target profit of 45,000 which results in 12,890. That's the first part. For the second part, we can calculate the profit for option 2 because we did not do so. We only have the contribution of 85,800 and it is a positive contribution. But in order to calculate the profit itself, we just need to subtract the fixed cost as well. And in this case, under option 2, see that the payroll services departments would be closed down. So we do not have to pay any sort of fixed salaries. The only fixed cost we need to pay will be that of the other fixed cost, which was given to be 35,000 for the payroll services. So let's figure out the profit for option 2. The contribution is 85,800. So that will be option 2 has a profit of 85,800 minus 35,000, which results in 50,800. And this is also higher than the target profit. So which is higher than the target profit by 50,800 minus 45,000, which is 5,800. Then within option 2, remember that we are closing the payroll services department, and since we are letting go of the employees, we might have to incur some extra redundancy costs as well. Let's write it down. Option 2 might include additional redundancy costs. Okay, these are the financial factors. Now let's move to the non-financial factors. Okay, for the non-financial factors, for option 1, remember that we had to use some overtime hours as well. And we are not sure whether the workers will be ready or not to do so. So that could be our comment. We can pose it as a question as well. So we can just see, will the staff be prepared to work overtime? This is for option 1 because there is no overtime for option 2. Then within option 2, we are handing over all of our work to a large overseas company, and whenever we are allowing someone else to do the work for our company, there should be some sort of confidentiality that should be maintained. It means that our company's data should not be exposed by whatever company is working for us. So in this case, we can question that as well. So will there be any confidentiality issues? Let's write it down. Will there be any confidentiality issues? This is for option 2. Okay, for option 2 we already have 3 points. For option 1 we have 2 points, so we need 1 more point for option 1. Okay, let's take a look at option 1. We can see that for option 1, H Limited would have to employ 2 new employees and would result in the department's capacity being over 100%. So if the department's capacity itself is being over 100%, then it might also affect the quality of the work that goes on within the department. Let's write it down. Since the department's capacity is exceeded by option 1, it might impact the department's quality of work negatively. Okay, now based on these factors, we need to make a final decision. So I would suggest the directors to go with option 1 because they have exceeded the profit or the target profit by a higher amount. The directors should choose option 1 as it exceeds the target profit by 12,890, which is more than that of option 2. Okay, that's all for this part. Now, for the next one, we have some additional information. The directors make use of cost volume profit analysis in the decision-making process. Within cost volume profit analysis, what we do is we change one factor and look at the impact on the remaining factors. We need to state 3 limitations of cost volume profit analysis. So the very first limitation is that it can only be used for a single product. Let's write it down. Only relevant for single product. The second limitation is that we assume that all production is sold, which might not be the case in reality. So assumes that all production is sold. Then the third one is that it also assumes that the fixed costs remain constant over a relevant range, and that might not be true in case of reality. So assumes that fixed costs remain constant over the relevant range. Okay. That's all for this part as well as the entire question. If you found this video useful, make sure that you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.